Okay, so welcome to case study number 3, and in this one we're looking at yet another reclaim trade, a reclaim style of trade. And here's the setup for this one. Okay, so what we have is straight off the bat, these are what you want to be looking for. These, perfectly equal lows almost. These often get ran as liquidity because the principle, the same as the last couple of times I've explained it, is when you get the bounce here, people like to build up these long positions, and a very simple and safe option for them at the time is to place the stop loss underneath these equal lows, okay, because most people will look at this as a level of support. But in fact, what happens is this generates a lot of liquidity underneath these lows, and a potential larger participant will try and move price down to liquidate the traders who put the stop losses under here so they can enter their position. So what we want to do here is very, very simple. So the support level here is actually, as we can see, this demand zone right here, okay? So that's what we want to see reclaimed, because we can see price moved up, printed a new fairly weak high. Okay, this is more of a liquidity run on the sell side. Price came back down. Okay, we find support at this demand zone, at this order block. We bounce, generate longs, run the liquidity. What we want to see, okay, is a push down. If we come down to a lower time frame, what we can see is there is actually a fair value gap right below this liquidity level as well. So this is the perfect, setup. You have a fair value gap here that gets run into, and we also have some lower time frame fair value gaps down here, which gets slightly tapped, as you can see right there. Okay, so we come down, we take out this liquidity level right here, we tap into the fair value gaps, and what we want to see is a run up and a reclaim of this order block. Okay, so if I come back out to the higher time frame, we can see that we push back into the order block. So as soon as that happens, what you want to do is get your long position in. The stop loss, as I've said before, wants to go on the most recent wick that takes place when you do run the liquidity. And as we can see, you enter, price is going to come down a bit. It's not always the perfect entry, but it gives you a very, very good momentum based entry that you can take advantage of a quick move back to the upside after you do see a liquidation event like this. Okay, and the way you might want to play this for TPs is you might want to take a profit here. Okay, so we have relative equal highs right there. So as we can see, people who get in shorts here, they'll be putting their stop losses above here, and this is how the market moves. Okay, people build their positions, their stop losses get hit, and if we play this out a little bit, we can see that price did, you see price comes and pops above, it heads back down, then goes back, and people are getting liquidated on either side. And, as a more informed participant in the market, you can take advantage of this. These always give you opportunities just like you had here. And if you play this out a bit longer, it does take a while, but I believe we do eventually reach the TP. And there you go. You see the TP is hit eventually. Okay, targeting the high for the range is usually effective. We see we did get a run up, a rejection, but holding through does prevail, and we can see that the highs do eventually get run, and this is a very successful, very high risk to reward trade. And that is the that's the beauty of this strategy, is because you get such a close nearby invalidation for the trade. Okay, because when this liquidation move happens, you don't want to see price pushing back down and taking out the low. Okay, that should be it for the move. That gives you a very clear position to place your stop loss. You're placing a stop loss on where traders have already been liquidated. So in theory, you don't want to see yourself getting liquidated again there, because that would imply that the market isn't really looking to fill the orders of larger buyers. It's just looking to move down naturally. Okay, and that's that's a sure sign to get out of the trade if you do run a liquidation. Okay, and what we can actually see here, there's always opportunities to be taken within the trade. Okay, so what you can see, if I get rid of this real quick, off the bat I can see we have near perfect equal highs right here. So this is a new liquidity level, and what we can see is price pops above, and it give you another little short to hedge the long. Okay, so you could play it like this, okay, targeting some of these liquidity levels, and that would give you again another fantastic little entry right there. Same again over here, you see near enough equal lows, so traders place the stop losses below that, a run, a reclaim, and you see you get another long position targeting the local high, stops underneath. So this is a very, very once you understand it, once you get used to seeing these play out, it's a very intuitive and a great way to play the market, and definitely one of my most effective trades, especially for scalping. Okay.